bienvenue à La French Tech on Air, our European podcast series on business and innovation. My name is Sabine Flechet. I'm the Vice President of La French Tech Munich, and I will be honored to be your host and your moderator for this session today. Before we start, I would like to explain a little bit what it's all about today. So La French Tech is a unique movement which is bringing together different opinions, different perspectives across startups, investors, policymakers, and innovators based on 100 of cities worldwide. In Europe, La French Tech is made up 27 communities that are connected across each other with the French tech startup scene. And it's trying to build a bridge between all these European tech communities and try to foster innovation and entrepreneurship in this ecosystem. So today, it's my great pleasure to introduce you to Itziar Estevez Latasa, partner at Iris, a French venture capital fund, with whom I would like to discuss today a major theme in the constitution of the European startup ecosystem, which is growth financing. So first, Itziar, welcome.
Hi, Sabine. Thank you very much for having me here.
Thanks a lot for joining us. So this session will be organized around 3 parts today for our discussion. First, we will talk about growth financing. What does it mean and what's the current status quo in Europe? Second, it will be interesting to understand what is Europe missing in this growth financing to be successful compared to other ecosystems to grow our European champion. And finally, I think it will be interesting also to get to figure out what is being made actually to solve the challenges of growth financing in Europe. But first, again, Itziar, thanks again for being with us today. Could you please tell us a little bit about yourself, who you are, how did you come to be a venture capital investor, what does Iris Capital do, and what's your scope of work?
So my name is Itziar. I come from Spain originally, although I spent now 20 years working in Germany and almost 15 years now working in ventures. So I got into venture through different paths. Started my career in the industrial space as a production engineer, actually at the BMW plant in Munich. But then I joined BCG to focus on private equity and commercial due diligences, and that's how I started, to take a look to the investment world. I spent 10 years working for Siemens Venture Capital, and then next 47 investing in technology, in a lot of software companies in different verticals like product design, cybersecurity, artificial intelligence, and more broadly deep tech. Maybe a few words about Iris Capital. So we are a European venture capital fund with offices in Paris, Berlin, and Munich. We invest at all stages. So from one side, it's seed and early stage investment, but also late stage and growth. And we focus on technology. We quite like complex technologies, but we also more broadly invest in digitalization. Just to give you a sense, we have companies in our portfolio like Exotech, warehouse robotics company, or Photo in Germany in freight forwarding. We also have a Shift in France in artificial intelligence dedicated to insurance, or JEDOX, just to name a few examples, in enterprise performance management, also out of Germany.
Yeah, cool. So really a French-German VC here with us and a female investor, which is great. So if we try to define what growth capital is, from what I understood, it's designed to provide long-term health to a business, which is usually in relatively mature stage, going through some transformational events. So they need some capital financing to finance some very significant growth. We have this type of businesses in Europe, but do you think we have that level of that or that power of financing in Europe to scale these businesses?
So growth capital is lacking in Europe, and although we have made some progress overall within the venture capital and growth equity landscape, we are still there's still a big gap. So when I joined the industry 15 years back, it was very small. Since then, early stage venture funds have performed well and have managed to grow the fund of the size. These companies that have been backed by those funds are now reaching a scale where they need growth financing. So it's actually a very interesting moment to enter in the growth equity side in Europe. And still on the fund side, it's still quite thin. So as soon as companies reach a larger demand or need for financing, they have to look to Anglo-Saxon investors or investors outside of Europe. So I think there's really an interesting point in time to really focus on growing the growth equity industry.
And why do you think it's that way? Like, what would be the reasons? I mean, we understand that Europe has a nation-state problem, so it's quite difficult to create a pan-European system or pan-European venture capital market across different states and countries with different local ecosystem. Is there a way? I mean, first maybe do you think that's the problem? Like, how can we bring the VC market to a pan-European coverage?
I think we are reaching that point where the ecosystem is growing and where we can start thinking about raising larger funds and stimulating also some of the key stakeholders towards that. It's quite natural in the development, I would say, of our industry that takes some time, and I think there are some positive examples. If we look at France, a lot has happened very recently. I think driven by the political agenda, but also supported by the private stakeholders, in particular in the insurance space, a lot of movement to enable growth, new growth funds. I think this is also soon to come in other countries, and we are going to see more large size of funds which are required in Europe at the moment.
Yeah, but if we look at the creation of a venture capital fund, they usually start at a quite local level, right? So you need to build a track record from a national or more regional area, because that's where you got your deal flow. Probably that's also where you got your network, and also investors are kind of reluctant to finance VCs across geographies when they don't know the jurisdiction. Do you think that that's true? I mean, how did you do it at Iris, since you're a French-German fund? You started probably with Paris and then exported yourself to Berlin and Munich, but you went beyond this nation-state problem that we're having in Europe.
Yeah, I think there are two dimensions to this. One is where do you invest and where do you place the capital? And there are some funds that invest in multiple geographies out of headquarters. And the other dimension is really how do you structure organizationally to best obtain that goal? It's true that sometimes it makes sense to start national. Sometimes it could be easier for some LPs, but not always. There's also demand for pan-European, and I think that's increasing. But in the past, sometimes there were allocations dedicated to specific countries, and some LPs wanted to have a very clear distribution. I think nowadays we've been through several waves. So there was a wave where some LPs wanted to have global investors, and we've gone through some of those phases, actually. I think now there's a strong wave towards pan-European, which is a natural evolution. How did we do it at Iris? We started with France, but with a strong conviction very early on to be strong in Germany. Not only to do investments, but really to have a strong presence and be a Franco-German or an international, I would say, player. And that was very important. And I think that's also a key to succeed. There are many funds that have the idea to go international, and also LPs push for that. So if you, over time, increase the size of your fund, you need to present also something new to your investors. And so one natural evolution as for companies is to go international. And so many times funds start with a satellite operation somewhere with one or two people. But if it doesn't work, they tend to maybe retrieve try something different. And I think that's very challenging to make it work. So I think being very committed to it and taking a long-term perspective on that is really the key.
Yeah, I guess, I mean, you're making a really good point, which is as the size of the funds are increasing, you need to present something different to your limited partners. And geography is one dimension where you can diversify. I guess also thematics and as well as also stages could be also a different way. I mean, I attended recently an event from BPI France, Capital Invest, where Nicolas Dufour, the president, actually was incentivizing and encouraging French VCs to open offices abroad, so to have a stronger coverage of the European market. Going back to this growth capital financing challenge that we have in Europe, why actually is it a challenge? Why would you say we shouldn't let foreign investors bring on their capital to finance our startups, our scaleups, and bring this unicorn to the next level? Because we need them. I mean, at the end of the day, if it was not for the American or the Asian investors, we probably would not have any unicorn, any French Tech 120, etc. So, but why is that a challenge? Why is that a problem?
So I think, as you were saying, first of all, it's a really positive sign to have access to capital altogether, independently from where it is coming from. And that has really enabled our companies to grow and have exits and stimulate the whole machine. So that's very positive. I think being dependent on those foreign investors is more the issue. We get pulled into companies oftentimes by the companies themselves, because they want to have a more balanced shareholder structure and not only a strong, for example, US investor for a number of reasons. And so I think that's really the solution, to be able to team up and to have the optionality always available.
Yeah, okay. I think I have a good stat on this, because if I'm not mistaken, in Germany, from what I read, 50% of the deal exceeding $50 million funding, which would characterize as a gross investment, are led entirely by foreign investors. But if we look at mixes, a mix of foreign and domestic investors on the cap table, this is around 45%. So it's not that bad. But nevertheless, only 5% are run by German investors. So you could say that the time of silos, where local investors are only investing in local startups and local startups are only getting financed by local investors, is kind of done. I think another probable challenge is the fact that we lose, as you said earlier, a bit of our independency, right? So there was a study by the chair of entrepreneurial finance by the Technische Universität here in München, which says that around 2/3 of growth companies that were actually co-financed by non-domestic, so foreign investors, were subsequently sold actually to foreign investors or went public in another country, which kind of posed the problem of sovereignty, independence, as you said, and maybe leakage also of resources, talent, IP to foreign countries. Are we losing on that front in Europe, because all our scale-ups are being financed by the US and we might have a risk of leakage?
Yeah, so you're right. The reason for going after US investors is to access capital, but also thinking about an exit. And I think that was the thinking also years back, where there was a systematic roadmap, which was to acquire a domestic investor. He will help you get a US investor. Many companies will actually relocate to the US for that. I think we are a bit going a different path right now. I think many companies prefer to keep that headquarter. I think they consider a US investor, but not exclusively. And we are seeing increasingly also syndicates of European funds coming together. I guess, it's also logical to include the US investor for the same argument you were using about European investors. If you want to go international, and the US is important, I think there's a value add for sure. So I think that's quite natural. Is an exit to a US player a problem? It's important to differentiate. I think there are scenarios where we should really avoid that. If it's, for example, a Chinese investor wanted to acquire an IP as sole motivation, or if it's a US investor who only wants to absorb a company and move it all together to the US. There's obviously not so much value creation in Europe, but there are also cases where it can make a lot of sense, where the objective is very clearly to support this company and help it grow within Europe for whatever strategic reason that might be or technical reasons. And I think that's also a very legitimate option and one that helps all in all the local ecosystem. But here also having options to exit within Europe is very important.
Exactly, and that's my next point. Actually, is the exit market liquid enough in Europe to enable our scaleups and unicorns to be sold or to IPO? We don't have a stock market which is, I would say, comparable to the Nasdaq. I would say also our corporates, even the largest tech corporates in Europe, don't have the means or the resources to buy back certain of our scaleups. So is there a problem also of liquidity in the market from an exit perspective in Europe?
Yeah, I think we are still lagging behind, but we are on a positive trend there. We are seeing increasingly larger transactions also taking place in Europe. And that's the important part. I think we can start from a lower level, but as we start selling companies to European players, we see also the value creation staying in a way within Europe. So I think it's a matter of time. On IPOs, there are some positive examples also already, but it's true that we are still lacking the whole ecosystem around it. In particular, tech analysts are oftentimes difficult to find on European markets.
Yeah, and I see also hope in the sense that, as you said, the market is evolving and getting more professionalized and advanced in that matter. We see this especially on the consolidation level, right? Quite a lot of startups merging or acquiring other startups to become larger in Europe. I mean, this will be actually the case of our French Tech Air podcast, the second one of the French Tech Munich. So M&A as a force for growth, as a go-to-market strategy. Is this consolidation actually a good thing? Like providing, additional ways of scaling the business without requiring foreign investors and without losing that EU sovereignty on certain very, very significant innovation like cloud, AI, quantum computing, etc.
Yeah, I think there's a lot of movement also given the current circumstances. We are coming across companies that are a bit switching their original plan and using the time now where maybe it might not be the best moment ever to raise capital at high valuations to consolidate as a next step, maybe a little bit ahead of time. So there's a lot of agitation around that within companies in our scope, which I think is very positive. It's maybe sometimes a bit underestimated, the difficulties and the complexity that brings. But all in all, a good thing to gain scale and then maybe go for financing a little bit later, but with a different dimension. I think that's positive. It's something that still companies need to learn a little bit more about that. But certainly a positive trend now in the acquisition possibilities within Europe.
Yeah, the acquisition space. And the second hope, I would say, is also the regulators. We see a lot of policymakers going also in that direction, acknowledging actually that we are lacking growth capital financing in Europe, and very much also, I would say, concern about this leakage of talent IP and this EU sovereignty topic. So we've been seeing also quite a lot of initiatives in France and Germany at a European level regarding funding, like building up fund of fund to finance the next stage of growth funds, right?
Absolutely. Actually, there was the Eigenkapitaltag last week taking place in Berlin, and the European Investment Fund and the KfW were presenting some of the major initiatives also coming back at European level, at national level. So I think there's a good pipeline. Some are already being implemented right now, but there are larger initiatives, pan-European, giving access to massive amounts of capital for very large funds, even 1 billion plus funds, which are mechanisms that don't exist today. So I think all in all, I'm very optimistic about how the growth equity funds are going to progress over time.
Yeah, I mean, you were mentioning this program, Scale Up Europe, for example, which is bringing a 10 billion euro pan-European fund-of-fund vehicle, partly financed by, I think, Bpifrance, as well as Germany, France, government, also Denmark, I think, with Vexfund, and I think also Greece with the Hellenic Development Bank, and willing to really nurture the growth stage funds that are then going to invest into the startups. So there is momentum. We just I think need to be acknowledging that it's needed, right? If we don't want to lose sovereignty on certain technologies, and also our talents, and also our entrepreneurs. What are you doing at Iris Capital in that direction? Like, do you plan to be more focused on growth stage going forward? What's your current strategy in that market?
It's very interesting you bring that up, because we are actually we just last week had some big announcements, including the rebranding and a bit our new strategy, which is very much a continuation of what we were doing in many respects. So stage-wise, we are going to keep this dual path, combining from one side seed and early stage, and then on the other side late stage and growth. We find it very synergetic in different ways. On the late stage growth side, it's really a big advantage to have access to this huge pool of companies that have been identified in the early stage. So that's very unique. Even on the late stage side, it's also interesting to be able to understand what's coming up very early on. We often collaborate with our portfolio companies to identify opportunities, small M&A opportunities, for example, or small trends coming up that are not so visible yet more broadly. That's stage-wise. And then from an internationalization perspective, we are really happy with the setup that we have and with the offices that we have at the moment. So we are doubling down on that as well.
Just because I think we need to mention the current market conditions, because I want this also podcast or video to be current in the setup we are in. Do you think that these market conditions and this correction on valuations, on funding, will affect the new trends in terms of growth capital, and will bring back the entire European ecosystem 10 years back? Do you think that's going to have an effect?
So if I take a bit the pulse of what's going on, it's a mixed picture, because from one side, we do have now a valuation issue, meaning valuations have come down in public markets, but also in private markets. And in the short term, that's problematic for us as fund managers. What I'm seeing there is many companies breaching a little bit of time through different options, other financing options, debt, or postponing financing rounds, trying to go a bit quicker towards profitability first, and maybe postponing some of the growth initiatives. So there are ways to work around this valuation topic, I think. What is more important, though, is how are the companies performing themselves. And if we look at our portfolio, it's very much focused on digitalization, and the same way we saw during the COVID times, very strong performance. We are very happy to see that the performance of the companies are strong, which is decorrelated with the valuation issue in a way. So as long as the companies keep growing nicely and are properly financed, I think that's the most important thing. And I think if we compare the US and Europe, I would say that Europe is a bit more optimistic in general about the trajectory than what we are seeing in the US. So yes, companies are preparing for the worst, but nevertheless, the performance has been good, and it's maybe not a bad thing to be a little bit prepared for difficult times and have some adjustments. It's also the opportunity to do those. So all in all, I think it's not easy times for companies to raise capital. in particular, but we are a long-term investor, and as such, I think unless you have to exit immediately on company, I think the prospects are still looking promising.
Yeah, and I also think you have a kind of a layer of capital to be deployed that's still significant, right? With all the different funds that have raised over the last 12 months. So hopefully, this will sustain at least for the next 12 months the market and our startups and scale-up. Well, thanks a lot, Itziar. I think that was a very insightful discussion. So I would like to thank you for being here with me, and of course, thanks everyone who's been listening in. And I hope you enjoyed the conversations as much as I did. As mentioned, now it's time to scale. I think in Europe, Europe is at the great crossroad to thrive and to shine with the infrastructure that we built over the past couple of years. Hopefully the current market condition won't stop this, and we'll have more and more growth capital financing feeding our entrepreneurs and our startups and scale up. Thanks again, Itziar, for your great insights, and I hope you enjoyed the podcast. If you would like to listen in to this podcast, it's available on YouTube, and it's also available on the global podcast platforms if you just want to have the audio. I would like also to thank the team behind the scene for preparing and organizing this session, and of course for the 40 upcoming podcasts of La French Tech on Air. So stay tuned, follow us on LinkedIn and on YouTube, and you'll get a lot more content coming your way. Thank you very much.